Hi everyone, Josephat Place here from Tradewithbolu Services, and today I'll be taking you on what are candlesticks in trading. Welcome back to this channel once again. If you're new, here we discuss about every vital information that could contribute and lead to your trading progress and success. So welcome. Please do well to go through our risk warning and properly understand what you're doing before proceeding. So let's get to it. What are candlestick patterns? So generally, what are candlestick patterns? Alright. Candlestick patterns are a form of charting analysis used by traders to identify potential trading opportunities. This is based on historical price data and trends. Alright, so there is a form of analysis. Alright, just like you have technical analysis, is part of technical analysis. Alright, super important, but is a sub part, I would say. So it's a kind of analysis. Alright, but here we call it charting analysis because it's directly with the charts, and that's what it is. All right, and this is used by traders, all right, to identify potential trading opportunities, trend reversals, and so forth, based on what is all based on historical price and charts trends. Okay, so let's move on. So here, for example, we have so let me get this on. Okay, so we have the increasing candle, as you know it to be green, and then the decreasing are going to be red. Alright, so they are also known as the bullish candlestick or the bearish candlestick. Okay, so this is the description of a candle. Okay, so we have let's consider the first one, the bullish case. We have the high of the candle, we have the close here. Alright, so this wick, we call it a wick. Okay, this here. Okay, this is known as the wick. So this is the wick of this candle. This is the wick. This is the wick. Okay, so we have the close of this candle, and this was the open. So when a bullish, that is when a bullish candle is forming, all right, it started from here. This way it opened, and then it went all the way up, but sellers contended with the price and it came all the way down here, but still retraced and finally closed here. So if you ask how did this candle form, it formed like this. It started like this, all right, went up, all right, then finally came down again. Pardon my drawing, guys. Okay, and that's where this wick you see formed. So it formed somewhere around here. Okay, that's where this wick formed. Pardon my drawing once again. Alright, that's where the wick formed. Then this actually retraced again. Oops, sorry, just draw this here. Okay, this actually retraced again and went all the way up. So this actually continued up, then retraced again, down, and so forth. And that's how you have this second wick here, which is this wick. So that's how this wick. Oops. Really pardon my drawing, guys, it's so not professional. Okay, so that's how these two wicks formed. All right, by the the body of the candle, the bears, the sellers, pushing the price all the way down here. But since this was the open, take note of the open, all right, of the candle. All right, if it's on the 1 minute, that means it's going to take 1 minute for this candle to close. If it was on 4 hours, that means it's going to take 4 hours for the candle to close. So it opened here. Alright, sellers contended with the price, came all the way down here. When the buyers got in, and finally they're able to close the price at this particular point. So that's the body. This is known as the body of the candle. Okay, this is the body of the candle, and these are the wicks of the candle. So this is known as the high, and this is known as the low. So what's the low? It's simply the tip of the wick down, and the high is the tip of the wick up. Okay. So we have the open and the close. Now the same thing applies here. The candle actually opened here because it was a bearish candle. Remember, a bullish momentum is going up and a bearish momentum is coming down. Okay, so we have the candle actually open here, and then the buyers contended with the price, so it went all the way up and formed this wick that you can see here. Okay, and then the sellers got in again and pushed the price finally all the way down. Then it retraced a bit and finally closed here. So this is the close, and these are the wicks. Okay, the highs and the lows. All right, so let's move on. This we're going to discuss about a few of candlestick patterns. There are a lot more, but we're just going to pick out a few of them. So the first one here is spinning tops. Okay, remember we said about wicks, right? So here, for example, this is the open, this is the close, these are the wicks. Okay, so this is the low and this is the high. Okay, so you have that. The same thing here. This is the open, remember it's a downtrend. This is the close of the candle, this is the low, and this is the high. Okay, so that's how you have that for those. So these are spinning tops. All right, you can see they're actually spinning tops. What do they mean? They actually mean that buyers and sellers have the same effect or influence on the market. So there's no significant move on the market. So you usually find this, when there's lost in volatility, and then market is just going maybe sideways at times in a consolidation, but mostly when there is less volatility on the market. All right, and you just have them forming, like this. Pardon my drawing once again, like this, just like that. And it doesn't really matter if they are green or red, all right, because they have no effect on the market. That is, buyers are contending, up to, pushing the price up to this particular level, and that's sellers, sorry, and buyers also are pushing the price up to that same level. So there's really no one winning on the market right now, either buyers or sellers, because they're pushing the price all to the same level. All right, and that's when we have spinning tops. So this is the hammer. You can see that here, it looks like a hammer. All right, and then we also have the inverted hammer as well, as you can see that there. Both the hammer and the inverted hammer indicate the reversal of a downtrend. Therefore it's better, sorry, there's an E here, therefore it's better to always wait for a bullish candle to confirm this pattern. Now let's say you have a downtrend coming all the way here, like you have a downtrend coming all the way here. All right, but for this you have to zoom in because they are candlesticks. All right, you want to see the candlesticks themselves. Like I said, it's a kind of chart in analysis, so very important, guys. So you have a downtrend coming up here, then you have your pattern. So let's say this, right, these three bearish candles are now here. Okay, so when we see this here, we want to ensure that we have a bullish candle like this two. Can you see that coming next after it, like one and then two, to confirm that yes, this is an inverted hammer, or this is a hammer. All right, and that's simply that's this simple confirmation that we have on that, and is quite it's an indication, all right, that the downtrend has come to an end, and then we have an uptrend, right, coming up for the market to go our way. So that's exactly the meaning of a hammer or inverted hammer. As you can notice here, the difference are just the bodies. Right, so the body here is up, all right, and the body here is down. Okay, and that's the only difference, right? So you have them after two bearish candles, is a downtrend. So you have two bearish candles, you have your candlestick pattern. The whole thing is your candlestick pattern, but you have like a trigger. This is your trigger, actually, I would say. So this is your hammer, is your candlestick pattern here, and then you have the expected uptrend follow. But remember, to confirm this pattern, you have to have a bullish block after that, or even two bullish block best, to confirm that yes, is a hammer or an inverted hammer. Okay, so that's super important. So let's move on. So we also have the shooting star. Now the shooting star is the inverse of a hammer, or an inverted hammer as well, and it simply indicates the reversal of an uptrend. So just like we had there, let's say we have an uptrend, price going an uptrend, and let's say this pattern, all right, appears here, indicated to the circle. So we have this pattern appear there, and like I said earlier, we expect to have an opposite block. So in this case, we have an uptrend, the pattern appears, then we could have two bearish. We'll have to have two bearish blocks, or even a bearish block, to confirm that it's a shooting star. So we have that one, okay, then we have two, and then we confirm that say this, and then we pull it all the way. All right, and that's how it moves. Okay, so that's the shooting star, is the inverse of the hammer. Like you see the hammer here. All right, all the way down we identify the hammer with 2 bullish blocks, takes it all the way up. For the shooting star is an uptrend. All right, and then you have the shooting star at the top of it. Okay, we identify the 2 bearish blocks, 1 and 2, and we take it all the way down. So that's that for bullish, the hammer, and then the inverse hammer, and also the shooting star, of course. So here we have the bullish engulfing, and I would say is the most popular pattern, right? Because you see it all along your charts. All right, and that's simply the bullish candle engulfing the bearish candle. All right, and in this bearish engulfing case, we have the bearish candle engulfing the bullish candle. Now, to engulf here means that the body of the bullish candle actually is bigger, all right, or engulfs, I would say swallows the red candle, all right, and that's exactly what we have here. The body of the red candle swallows that of the green candle. Okay, so that's why we have bullish engulfing and then the bearish engulfing. All right, so a little to do task here, or things to practice. Pause this video right now, all right, and try and identify 2 of these patterns each on your MT4. Okay, take the bullish and bearish engulfing, the shooting star, the hammer and inverted hammer, all right, and the spinning tops. Okay, there are a lot more, there are many other candlestick patterns, but we decided to just discuss about this because they are very popular. All right, and you have the tendency of seeing this more and more, easily identifying this more and more on your chart as you trade the market. So that's super important, guys. Okay, so pause this video, check it out, and then come back to continue the video. So welcome back. You checked the video, you checked the patterns. All right, do want to leave a comment so we will know how it went and so forth. Okay, leaving you here with a quote. Sometimes said, quote, the smallest things take up the most space in your heart. All right, this might look quite simple, but is actually a major truth. Now, why do I say that? Because all along your charts you're going to be seeing candlestick patterns. All right, yet is some people consider it to be very menial, and once you have a strategy, that's all, you do not need this and so forth. But remember, trading has a language, I would say, right? And you have to understand that language. All right, you have to understand how to read the candlestick. You have to understand how to read the market. All right, because in trading you do not anticipate, you react. Okay, you react to what the market is saying. All right, and that's super important. When we have, for example, an uptrend and we have this, then we can react to it. When we can react to it, with a sell position. Okay, because it works out as our candlestick pattern. Then in compliance or in alliance with your whatever strategy you're trading, right, this could be an add up, right, an advantage, okay, to your strategy. So that's super important, guys. The little things add up to be the great things. Sorry, let me get back to the quote. The smallest things take up the most space in your heart, right? And that's super important. As little as candlestick patterns are, they're actually what you see on the market all the time. They're actually what you face on the market all the time to use your strategy. All right, so as big as your strategy is, right, candlestick patterns are the major things you see. All right, so that's super important, guys. So happy to have been able to take you through candlestick patterns. All right, this is an advanced, all right, level of the basic course, and Joseph Bless here. I'm super happy to have been able to take you through it. All right, do well to check our other contents, all right, as they appear on the screen as you continue your trading journey.